Hello friends, we all know that GST is approaching from 1st of July. Now there is hardly any doubt that it will be implemented for 1st of July until unless certain unforeseen circumstances comes up. So the first and foremost which is to be done regarding the GST is that every assessee has to get himself migrated on the GST portal. So everyone who is still not migrated into the GST portal must get itself migrated and get provisional registration through the process of registering into GST portal. Secondly, the foremost task to be done and for which homework is required is that the ITC which will be available on 30th of June 2017 has to be updated on GST portal through a specific statement. The transitional rules for the purpose of migration of ITC credit has been notified, and that is the foremost task which is to be completed. For that purpose, three simple rules are there. Number one, you must file your returns in the existing law of excise, service tax and local VAT. You must file your returns in the existing law in time, and whatever credit you will claim, whatever ITC you will claim in your regular returns in the existing law, whether it is excise or service tax or local VAT, the credit which is reflected in those returns will get migrated into GST regime automatically. So whatever credit is there in your returns will get credited to the credit account of your GST regime. Secondly, there may be certain credit which is not reflected in the returns in existing law. For example, if you are a trader, then you are not registered into excise, but the purchase of yours being a trader has suffered excise duty. So this excise duty on your input purchases, which already has been paid to the government, will not be reflected in the returns which you will file in the existing returns. But this credit is also going to be available in the GST regime. The rule is, if you are having the duty paid documents, say you are having the excise bills of your purchase, but you are not registered into excise because you are a trader, then this excise duty paid on your input purchase will be available in GST regime. Whatever excise you have paid, which is documented in the form of duty paid bills or invoices, will be available. So take care of that. But this credit is available with respect to the stock which you will be having on 30th of June, and such stock is not older than 12 months. So whatever stock you are having on 30th of June, which comprises of not later than 12 months, will be available to you provided you are having the duty paid documents, and whatever actual duty you have paid on such purchase which is there on stock on 30th of June will be available to you. Next, there may be cases of the traders where they have suffered the excise duty but they don't have any duty paid bills or invoices. Even in that case, you will get credit for the excise duty which your purchase has already suffered. That is provided as per the rules. The rule says that such kind of stock for which the purchase has already suffered the excise duty, when sold in GST regime, then what will happen? First of all, you will pay the full rate in GST regime, but a specified credit, 40% or 60% depending upon the rate under the GST regime. So whatever GST you will pay on such goods post 1st of July will be available to you as a credit as a specific percentage, and that specific credit will be credited to your electronic ledger of input and will be available against the CGS, CGST liability in future. So, my request is that all should be ready and all should do proper homework such that none of the ITC available on the stock on 30th of June gets wasted or deferred or debarred. Thank you.